understanding the primary markets and the secondary markets. Hello and welcome to today's episode of the BSE's Investor Education Awareness Series. I am Siddharth Zarabi, and today I'm going to touch upon the primary market and the secondary market and what it means for you as an investor. The primary market is basically a platform where companies issue shares or securities for the first time to the general public. This is done via an IPO where companies give a portion of their shares to the public and raise funds and fulfill their long-term capital needs for growth. These issues are made and done in various forms, such as an offer for sale, OFS, a rights issue, a bonus issue, public issues, as well as some more. On the other hand, a secondary market is a place where existing equities, such as shares, treasury bills or T-bills, options, bonds, debentures, and commercial papers are traded amongst a pool of investors. The main feature of the primary market is that it helps in creating long-term capital for the company issuing the shares for the first time. Only a fresh issue of stocks takes place in the primary market. But on the other hand, a secondary market is where existing securities and shares are traded amongst investors, and this can happen continuously. A primary market offers financing to companies looking to expand their products, services, and their organization. But the secondary market is not for companies, as the companies themselves are not involved in any trading or such transactions. In the primary market, investment bankers are involved. In the secondary market, the broker acts as a middleman or an intermediary to trade on your behalf. A company can sell its securities once in the primary market, while as in the secondary market, you can buy and sell an unlimited number of times between investors. We hope that you've got a better understanding of these two types of markets that play a very significant role. And as I leave you today, I leave you with one more expert piece of advice. Take a look at it.
The name primary market comes out from a situation when a company who is trying to raise money from investors, they make an issue, a public offering, and they come to the market. So till the time the company is listed onto the exchange platform and they want to raise money, this is a situation where it is called the primary market offering. So many companies who are listed today, when they started their journey, that journey started when they started raising money from investors. They came to the market, and after raising the money, they listed their security into the secondary market for trading purpose. Moment you put your security into the exchange platform, it is called secondary market, where the trading starts taking place, where the buyer and the seller meet on the exchange platform. They trade between them and they exchange the securities against the payment. So in a way, it is a very simple process that on one side the investor raises money or the company raises money through investor, through primary market route, and then they come to the exchange for listing purpose, and it becomes secondary market activity thereafter. So both are complementary to each other. Primary market precedes secondary market, and thereafter I think in secondary market investors do the buying and selling on a regular basis.